Hello everyone, and welcome to today's session on fraud in organisations, the prevention and the cure. Before I get started, I'd like to acknowledge the Gadigal people of the Eora Nation, the traditional custodians of the land, and pay my respects to their elders past and present. My name is Gavin Stuart. I'm a partner in the commercial disputes team here at Bartier Perry, and I also head up the organisational fraud and corruption work area. I'm joined today by guest panellists Emma Levett, Andrew Gill and Alice Lands. I'll just run over a few housekeeping items before we get going into the content of the event. For our live stream audience, thank you for attending, and please feel free to send through any questions using the chat function. We'll endeavour to answer your questions at the end of the panel discussion session. For those in the room, we will have a roving mic. If you can just put your hand up when it comes to question time, and we'll make sure that you have a mic. Before I introduce the panellists, I'd like to say a few words about why we're here today. So this is the first event that Bartier Perry has put on from our newly launched organisational fraud and corruption group. Why are we doing this? We're seeing a lot more activity in this space generally, and our research shows that businesses are, as a general statement, underprepared to deal with all forms of fraud. We want to ensure that we're at the forefront of this area and that we're looking proactively to add value to our clients in this space. When we talk about fraud at Bartier Perry, our focus is organisations, as the name of the area suggests, rather than individuals. So today we'll be exploring fraud themes via a panel discussion with 3 experts and also some contribution from a few Bartier Perry partners. As the invitation for today's event set out, we'll be looking at how boards and directors can discharge their duties by managing the risk of fraud in the current environment, fraud prevention, best practice policies and processes. We'll be looking at immediate steps to take if a fraud event occurs in your organisation. We'll be looking at matters to consider when investigating a fraud event, and tips and traps for the recovery of misappropriated funds, as well as management of reporting and other regulatory requirements that might apply. So, who is the panel today? Firstly, Andrew Gill. Andrew is a director of McGrathNicol and is a highly regarded financial crime professional with a range of commercial, regulatory and enforcement experience spanning more than 25 years. Andrew has established and managed some of the most highly regarded and awarded enforcement teams in Australia. Andrew has a long-standing interest in money laundering and terrorism financing, including leading task forces into fraud and money laundering in banking and superannuation. Additionally, Andrew has extensive experience in matters of corporate corruption, establishing and leading the corporate corruption team of the New South Wales Police Force. Throughout his career, Andrew has utilised a data-driven approach to identify the core of a problem and then employ a strategy to solve it in the most efficient way possible. Most recently, Andrew worked in the insurance industry, where he provided advice to government regulators and industry bodies and devised methods to identify the fraudulent penetration of regulated schemes by professional scheme participants. His work in this area has been recognised nationally and internationally. Next, sitting next to Andrew, we have Alice Lands. Following a 25-year career as a speech pathologist and in various management roles, Alice Lands is currently the CEO of a not-for-profit organisation that supports children from birth to 18 and their families across a range of disability, education and family support services. The organisation supports approximately 2,000 children every year across 4 local government areas, employs over 70 staff and provides over 20 programs funded through 13 different sources. Alice has been on state and local boards of peak bodies in both early childhood intervention and community services sectors. She was selected in the inaugural group of CEOs from New South Wales and the ACT to participate in the Social Impact Leadership Australia program last year. She is about to complete the AICD Company Directors course after obtaining a Women's Regional, Rural and Remote Diversity Scholarship. And lastly, but not least, is Emma Levett. Emma is a partner and head of forensic advisory services at Sedgwick, which started out as a claims administration company and is now a global provider of technology-enabled risk, benefits and integrated business solutions. She is a professional forensic accountant with experience across various industries and work environments. She has a diverse background in investigations and financial analysis and is passionate about leadership and continuous development. Emma is also an expert witness, providing expert evidence. So, before we get into the panel session itself, I also just want to say this, that today, when we talk about fraud and corruption, we're talking about a number of different areas that fall into some different baskets. There's cyber scams, confidence scams, and used to be, well, still called Ponzi schemes, but any confidence scams around of that nature. We're talking internal fraud by employees and other people, and also dishonest and fraudulent conduct by people in positions of power, bribery, nepotism, those sorts of things. But today we're really focused on confidence type scams and internal fraud. We're not really going to spend a lot of time talking about cyber scams themselves. There may be some content around director obligations and board obligations and how boards may manage cyber scams and cyber issues as under the broad basket of fraudulent conduct generally. But really we're here to look at internal fraud and what I'm calling confidence type scams. Now, I thought an interesting way to get into this topic would be to look at a recently reported example of fraud, which involves a very large accounting firm, which is all reported, so I can say this. It involves Deloitte. And I think it'll allow us to explore many of the themes that come up time and again when we're looking at fraud generally. Now, I don't know if anyone in the room has seen the articles in the Sydney Morning Herald and the AFR and other places about a fellow by the name of Mr. Ambijit Endo, who was a partner at Deloitte for 10 plus years. Now, in addition to working at Deloitte and doing whatever it was he did at Deloitte, which we're not going to cover today, he, on the side, was touting a scheme to partners at Deloitte, clients of Deloitte, people in his network. And what he was saying was that he could provide them with very fast returns within 6 months or so. He could provide them with very high returns, 20 to 40% on their capital contribution. He could ensure that there was zero risk in this investment because the investment was in Indian government bonds linked to infrastructure work in rural roads in India. And he was also telling them that early investors will get paid out by later investors. So it's looking a bit like and sounding a bit like a Ponzi scheme at the moment. And just pausing there, just as a comment, I'm sure panellists will have other things to say about this. But the features there are very much the sorts of things that fraudsters like to tell you. You know, you can get a guaranteed return, it's going to be very high, it's going to be very quick, and it's going to be all good for you. What else was he doing? When investors in this scheme were asked to pay money, he was asking them to pay into multiple personal accounts. He induced, as I indicated, some quite sophisticated people, it would seem, to invest in this scheme. Partners, as I said, of Deloitte, I think the managing partner came out and said that he had contributed to it. Clients, other people in that network. The reports in the paper were that this fellow, Mr. Endo, was very believable and credible and very persuasive. And interestingly, a number of investors apparently said that they wouldn't have invested but for the link with Deloitte. So we'll come back to some of these themes as we have the discussion. This fellow's now disappeared. His flash apartment down at the Quay looking out over the bridge in the Opera House is available for rent, and he's gone. And I imagine those at Deloitte are, they are trying to distance themselves from it, but, questions have been raised around their policies and procedures, disclosure obligations, and, even duty of care in this. So we'll be looking at some of these things as well. So just before I start asking our panellists some questions, I just want to note that based on this particular scenario, which does, it's amazing really. It could be a hypothetical scenario that someone would just make up. But the truth is stranger than fiction, of course. And his scheme relied heavily on trust and confidence and good old greed. People just wanting more for less. And, that old adage that if something's too good to be true, it probably is. And yet here we are in 2023 and a whole bunch of people have paid up to, and I think he took up to $60 million from these people. So it's pretty amazing, really. So without any further ado, I just want to kick things off by asking a question to you, Andrew. You're called by Deloitte as this story breaks, and just assume for the moment that Deloitte didn't know about it. And they pick up the phone. Someone at Deloitte, in a position of power, calls Andrew Gill at McGrathNicol and says, okay, what do we do? So what are you thinking? What are the immediate steps that you're thinking of that need to be taken here?
So for me, it's always the same thing. In fact, everything you've just described there, and you're right, it describes sort of almost every key element that you get every single time there's a fraud. In fact, if you had taken his name out of it, I don't know if that's me who's reverberating there, but if you had taken his name out of it and replaced it with cryptocurrency, I think you just described a lot of cryptocurrencies there as well. So those impossible returns and all of this type of thing. But the first thing, and always the first thing, is when did this happen and speed. So we want to find out where that money's gone and follow that money trail. So you want to find out who's involved, and people inevitably want to get their money back as well. Okay.
And so that's really from the investor side, really. What about from Deloitte's side?
So from their side, the first thing I'd be looking at in this day and age is books and records. So what records have we got that are going to substantiate these matters? So if this turns into an investigation, so understanding what evidence is available, who are the people who know something about this, what records can be seized at that point in time. Often, it's always the thing about evidence is you need to get it as quickly and securely as possible right in the first instance. And then you can do whatever you need to do after that. But things like that, you've only got one chance to get it right. Get that evidence, lock it down first, identify who the witnesses are, and then move on from there. So you're going to get a lot of the same questions from if it was Deloitte, if it was a bank, if it was any big corporate, you're going to get a lot of the same questions, and people always want to know the same thing. How did this happen? The key thing that always comes out, and people always say it is, but I trusted him. And this is, of course you did, or you wouldn't have given him $60 million. So this is always a key theme as well, is trust and that breach of trust. Is anyone else involved? Are other questions that often come up. How can we get some assurance there aren't other people involved? But primarily people are going to want to know what happened, how did this happen, how do we find the evidence, and how do we start moving down that track?
Okay, so we'll cover some of those other things as we continue this discussion, but just pausing at moving quickly to gather documents and information really quickly. How organised, in your experience, are most of the organisations that you've come across in terms of having documents and information stored in a way that is easily accessible, that allows access as quickly as possible, and then allows you to get on and conduct the factual investigation that you need to do?
Generally speaking, I'd say horrifically underprepared. But then again, you don't really set your records up for the purpose of of the chance that you may get a fraud at some point in time either. So it's actually not difficult to understand what it is that you need to do and how to do it if you do it all the time. So you find someone like a big bank, for example, who've got quite sophisticated investigative personnel in there, so people who are very experienced, they deal with this all the time. They're pretty good at dealing with these incidents, locking down the evidence. But then you've got this whole range of organisations which are obviously a lot less developed at knowing what to do and what steps to take. So often we're engaged through lawyers like yourself, and I guess that's the whole point of people who do it all the time. It can be quite straightforward. It can be quite easy as long as you know what it is that you're looking for.
I was going to say that, you know, from a lawyer's perspective, and a lawyer who looks after these sorts of issues for clients, it's one thing to be able to access the information and gather information. It's another thing to gather it in such a way that it's legally admissible and that you are able to move as quickly as you need to move. And that's often where the coordination is required.
Oh, definitely. And it's usually, I mean, there's only so many ways you can store data on an email server, or like things like Teams chats and things like that. And it's not necessarily something that organisations do need to have a lot of sophistication in terms of, as long as they know or got some sort of idea or plan who to go to make sure that you can sort it out. But that sort of thing is critical in the first instance.
Yeah, okay. Well, I will come back to a whole lot of issues there. Before we do that, though, I wanted to ask Alice something. Here we're looking at a scenario where Mr. Endo was a partner of this organisation, and for the current purposes we could sort of interchangeably use partner or employee for the purpose of a discussion, I suppose. But it does raise this issue that I think is very interesting, that, you know, in every business you have people who are working in that business in some capacity that also have a personal life and are also doing other things. So, Alice, you're involved with a not-for-profit, you know, CEO of a not-for-profit. Presumably there's a lot of people involved in the organisation who are giving their time to help it, are doing other things outside of your organisation to either, make a living or otherwise. What are the things that you and your organisation think about in terms of policies and procedures, disclosure obligations? I mean, how do you, what is best practice, I suppose, in terms of how you set things up internally so that you are able to understand or obtain information when you need it, or ensure that people are disclosing things that need to be disclosed that might have an impact on the business?
So I think there are a range of things that need to be done in that space by many people in the team. So I guess from a board perspective, having a board that can keep asking questions, and that there's a good supportive relationship and a healthy relationship with the board and the CEO and the key management people, I think is really critical in day-to-day operations for an organisation. We know that board culture is really important, but I think particularly if something does go wrong, I think that's a really good place to start, because I think having a cooperative relationship there is very important. I think probably if an event happens like that it does throw into chaos quite a bit for people, and I think that the initial shock for people, particularly working in organisations which are probably, I don't think anyone expects fraud to happen to them. This is probably the fair point. But when you have a situation where the organisation is not thinking along those lines, and this happens, it is absolutely built on trust, usually people who have a trusted position, but also the fact that the board and the management team can work closely together is really important. I think in terms of processes and policies, having more than one person who knows the systems very, very well, and people who have oversight, and getting external consulting in at regular intervals to look through very closely is very important. But I guess I'd also say that doesn't mean, because an external consultant has looked at things, extra audits or consulting firms, that doesn't actually mean that people can sit back and not think about that. So I think the interaction, I guess, between the human side of things and the policies and procedures is really important, and a board needs to be aware that they're all happening in an interplay.
Okay, thank you. Now, what I thought I might do is throw to Rebecca Hegarty now, who's one of our partners in our corporate and commercial team, who sits on the organisational fraud and corruption work group. And if I can, Rebecca, what's your perspective on this issue around how what as an organisation you need to have in place so that if something like this happens, you can gather the information, understand what you need to?
Yeah, look, we advise a lot of our clients. When you think about, imagine you're a director and your responsibility, they call it having an inquiring mind. So is it enough for us we're not experts in everything. We're not across everything as a director. But at the same time, when you think about your director's duties and we think about, care and due diligence, and we think about, acting in the best interests of the company, you're taking into consideration the size of your organisation, the sophistication. Are we across enough of the information to know that we have checks and balances and that we have policies in place? Because when you're called to account as a director, I think the real question for a lot of us who may be a director will be, well, what policies did we have? Where were the checks and balances? So we talk about, yes, you can do an audit, of a balance sheet and the accounts. I also say you look out for the red flags. I remember having a matter years ago where it was the scenario of someone who was quite high up. He was the general manager. The directors trusted him with everything. He knew that company, its history, and he could recite it to you, till the cows come home. He knew it better than the directors. And they fell into this pattern of going, but he knows, we trust him. And there weren't any critical checks and balances or even policies in place to address it. When the fraud came to light, the big problem was they were just like, what do we do? It was such a shock to the system that they actually didn't even have a disaster recovery plan, or what do we need to do? As simple as, garnering the evidence, preserving the evidence. Now, we did help them when they came to us at that stage, and that was to get a forensic accountant involved. And, it was a very elaborate scheme that this general manager had set up and perpetuated. So I think when a lot of our clients come to us and we talk about policies and procedures, and, as I said, if you're held to account and you can't actually say, well, we had this in place and we did this training for our staff and we had these checks and balances, so everything wasn't down to one person. If I was a director on that board, I want to be able to, rely on the defence that, well, we had these things in place. So the exposure from a director's perspective is quite onerous. But as I said, it doesn't require you to be an IT expert or, some other kind of expert, but you need to have you need to ask those questions and you need to satisfy yourself that you understand what are the risks to your organisation.
Okay, thank you, Rebecca. Now, Emma, you're called by Andrew to help with the investigation. So how can you help here? What are the sorts of things that you are called in to do in this scenario? What are you thinking about? What documents do you need to see? What's the scope of what you're doing? And I suppose, where do you see organisations going wrong in how they handle this phase of the work?
Yeah, sure. So really, the first thing we're doing is we're really trying to understand exactly that, the scope. What are we dealing with here? How far-reaching is it? How long's it been going on? How much access did this person have? you know, we know if there is particular allegations around one type of fraudulent activity, the chances are there could be others. They could be doing this in a number of different ways, defrauding a business or individuals in a number of ways. So the first thing we're really doing is understanding the scope, understanding what type of entity we're dealing with. So, you know, in the case of, you know, the general manager and the forensic accountant that comes in that situation, we're understanding what his remit was, what he had access to, what systems he had access to. Could he access the financial accounting system, and if so, could he therefore manipulate it? What were the checks and balances that was outside of his control? And when we're really looking at, okay, well, everything that he was able to touch, we need to go through a process of validating whether or not there's any particular fraudulent transactions in there. So, I mean, ultimately, we can sometimes get tripped up by I guess, accounting software because it can be manipulated. So we're always looking to what is the real source of truth here. So bank statements and actual transactions that can't be manipulated, banking records are really our one source of truth. When you talk about trying to understand what's gone wrong in a fraud like this, it is really following the money. And whilst the accounting and the practices that are in place can give us indications around where things have gone wrong, really in order to look at how we validate exactly what that is, we're going back to the source records.
Yeah, so a couple of things about that. One is you talked about the scope of what you're asked to do. Now, I suppose the scope of what you're asked to do will be different depending upon what the objective is. So if the objective is for the organisation to be able to make an insurance claim under an employee dishonesty policy or something, that work would be different. Maybe not markedly different, but it would be different from your perspective as compared to work to effectively just pursue the money.
Absolutely. So really we want to understand what's the end goal of the client who is the business that has been defrauded. So is that to work with people such as yourself and get an ex parte freezing order without notice to the perpetrator and try and get that done as quickly as possible? Then we're working in a particular way. If it is, no, time is not an issue and we can be really thorough and find every single dollar of fraud here, then that's a different way that we approach it. If we know that, you know, the perpetrator has a gambling problem and really there's not much chance of any recovery of funds outside of perhaps an insurance policy, then we're looking at, okay, well, we might only have $500,000 insurance, so let's do enough work to make sure that we can cover that amount. But really anything over and above that is work that might not actually be for a purpose if there's no real money at the end of it.
Yeah, and that's really important. And the reason why I think it's important is, you know, from our perspective as lawyers, because you're moving so quickly in this phase of the work and decisions need to be made quickly on often limited pieces of information, you need to you're reliant upon experts and other people who have experience in the process, who understand what may be there and what the steps are, and so that the decision making can really drive the actions you take, is what I'm trying to say. So that you don't, so it's, if I just in terms, so if an organisation says we'll investigate it, we'll find what you need, that what that organisation finds and locates may not actually meet the requirements, and so then you've lost time, you need to do it again, and that can be very costly sometimes. The other thing you mentioned, which I thought was interesting, is going to the source of truth, which, you know, bank records are pretty good. We've seen different types of, or different MOs used, I suppose, by people conducting internal type fraud, and often they involve manipulating, you know, the internal financials. Recipient created tax invoices that leverage off correct information that comes through the organisation, introduces incorrect information that then as a whole is run through the financials. And so you can't necessarily trust looking at the financial statements for the real picture, let alone to identify red flags and things. And again, if you're going to unravel all of that quickly, it's probably going to be very hard because it will take often a lot of time and gathering a lot of other documents to unravel those things. Okay. Before we move off Mr. Endo, we'll probably come back to him from time to time. I did want to ask Darren Gardner, who's a partner in our workplace team, just a question from this perspective. So if you're advising Deloitte, and I mean, for the purposes of this question, consume as an employee or a partner or whatever sort of serves to illustrate the answer, what are you looking at? What's the advice you're giving? How are you approaching managing this person?
Well, what usually happens when I get those calls is the question is, how quickly can we get rid of this person? And I often say, well, that's all possible, but keep in mind that this person probably knows the most about what's been going on. And whilst you will no doubt usually have a very good legal reason to terminate the relationship and a mechanism for doing it, do you want to do that now in an uncontrolled way, or put in place a process that might help improve the forensic investigation process, as well as the critical thing, which is the potential damage to your good employer brand, your corporate reputation and so on, and how do you manage that not knowing anything or knowing very little. And so the interesting thing about whether it's Mr. Endo or anyone else in these situations, there's a common sort of theme with these people. They have a personality where they're very self-interested. And so often that means too, knowing that the gig's up, they're interested in the best way of exiting by protecting their own self-interests. Now, it means you have to treat them with caution, but I've often come across situations where if you plan it carefully, where you're talking about, and certainly a partner of an accounting firm has fiduciary duties to all of the partners, and they're not just, they are part of the business. So what their reputation is tied up with yours in a horrible way. But the same if it's a senior employee, the higher they are, the closer they are to the brand of the business itself. But if you use that sort of self-interest in a process of discovering more about what they've been doing, perhaps without making any binding promises, that there could be an exit arrangement that helps to sort of recover what's been lost by partners, clients, and to restore, to protect the business, you might actually discover a lot more rather than just exiting them from the business straight away, because as soon as you do that, they're an adversary and they'll be told to say nothing, and you'll be left trying to unearth everything. So I've been surprised how a controlled exit doesn't say you certainly get rid of them. You do it in a way that protects the employment law risks or the partnership law risks, but you do it in a way too that seeks to optimise recovery, protection of brand and reputation, and also assisting others who you've got engaged to help sort of discover the true extent of it. Because quite often they will admit to something sufficient to get out of it, knowing the gig's up, but that's just a small part of the whole scheme. And when you ask some directed questions that might affect their interests exiting the organisation, they might be more prepared to help. So don't assume just because they're crooked and trustworthy that they're not going to be able to assist, but also be cautious because they're usually the best employer that nobody thought would do it, because that's why they're good at doing it. So yeah, you've got to be very careful and use the right assistance to test everything.
In this case, I saw yesterday, I think, after the initial story broke, Mr. Endo's come out and said that he denies any wrongdoing. So I suppose that puts Deloitte in a situation, like in the scenario of that person being a current employee or something, in a situation where they have to be very careful, don't they? Because they shouldn't be prejudging. It
could be too that they're a victim of a confidence scam themselves, and they've been caught up in it. You don't know, but the more you can find out and the more time that you can use that's tolerable, the better. And look, at the story is similar as I say, you can change the names and the story is pretty the same, but the risks are usually common in that sense. Yes, while you might have legal sort of rights to do something immediately, stop, pause, think, plan, and then improve your prospects is probably what I'd normally say. And also one other risk that often comes into play, you might have external commercial or contractual relationships that are being put at risk because you've made promises to those, like it might be a government entity or some other external relationship where you could have liabilities if you don't work it out and protect it. So you've got those sorts of external commercial risks.
And I'll ask you just to pause there, because it's a very nice segue into asking Jennifer, who's in our commercial disputes team and has a focus on professional responsibility work, just to say a few things about what all this means for Deloitte's position vis-a-vis investors. What are there any duties here, and also just the general professional responsibility obligations on
Thanks,
Deloitte
Gavin.
too.
Yeah, I was going to say I think I read an article today about Mr. Endo, and I was listening to what Rebecca was saying about having some procedures in place to kind of ensure these things don't happen in the first place. But I read that he'd actually left Deloitte in early 2021 and joined Sayers Group. And it was Sayers Group executives who fairly quickly started to wonder about his unrelated and unauthorised business outside of his usual day-to-day work that actually seems to have led to the uncovering of what may be a very large-scale fraud. And he apparently disappeared before that investigation was completed. I think the problem possibly for Deloitte and something that investors will probably be looking for some advice about if they're not able to recover those funds one way or another through freezing orders and asset tracing and so on, is whether or not the Deloitte partners have endorsed in some way this scheme, because both by investing in it, the fact that they'd invested in it and not uncovered it through their own investigations or procedures, some investors might say that encouraged them, gave them confidence in the scheme to invest in it. So that's something that we would look at and advise about. And then separately, of course, professions, accountants, lawyers, vets, pharmacists, and so on. We are all highly regulated professions, and we have regulatory authorities that govern us and look at what we do. So something that I do as part of my practice as well is advise those professionals in relation to their obligations with those regulatory authorities and in relation to investigations and so on. So I had a recent matter, for example, for a law firm who had an employee who had stolen trust funds, and that leads to lots of obligations in terms of mandatory reporting requirements to the Law Society and so on. And of course, investors and other people can complain about you, and there's then disciplinary complaints processes that you have to be put through. Obviously, ASIC can do investigations too, which we also assist with. And we're doing another one at the moment where ASIC are investigating a Ponzi scheme. So there are all those types of issues that we can help with. Thanks, Gavin.
Thanks, Jennifer. And just picking up on something Jennifer said, we've certainly run cases where the special relationship between clients and accountants has become really the main issue for the accountant in that situation, where in these examples anyway, the accountant and clients have decided to invest in some sort of a business. It hasn't gone so well, and the clients of the accountant turn around and say, well, you advised me, you said it was a good deal, and that's the base that I relied upon that to put my money in. Now, whether that is actually what happened or not, that's the evidence that's led in court. And that is a pretty strong platform to argue that the accountant should have some liability, or does have liability, for the loss sustained by the client or clients in that situation. Everything turns on its own facts, but it's something to bear in mind when it comes to the relationships of trust, lawyers and clients and accountants and clients, and that it does feature a lot in this sort of area. Now, Alice, I just wanted to come back to you and ask you about reporting obligations. So I'm not sure whether there's any different obligations on an ACNC registered not-for-profit or a standard private company. But what's your perspective on reporting to the different bodies when these things happen?
Well, I think, like anything, the range of situations and variables is going to be huge. So depending on the particular organisation or the professions, as you said, Jennifer, or the type of organisation or the type of event that it is, I think that is going to dictate very strongly what to do, and that there isn't one answer for that. There's not one size fits all. So really the only thing that people can do is to get the right advice and to get really good advice from someone who really knows about that, because the average not-for-profit organisation is not going to know all those things. They're not going to know when and how and who they should go to. So they're going to need really good advice. So I think that would be my message. And I think also it's not a given. So people assume, I think, again, one of the first things is that if people feel like they're in a little bit of a shock about it, then they're going to think, I need to do all of these things. And in fact, some things may be counter to what you need to do in terms of confidentiality or in terms of reporting. So it will depend on if the person is in a director role or an employee, and it'll depend on what profession they're in and all those sorts of things, and at what stage of any process things get uncovered. So I think while there's an initial gut reaction or instinctive need to do something, I think I would say just that you need to get the right advice.
Okay. And while we're talking about reporting, Andrew, you're an ex-policeman, now on the private side, so probably a good person to ask this question. I mean, is it necessary to report these things to the police?
It's a criminal offence to conceal a serious offence. So that's often problematic for people to deal with. So fraud's a serious offence. So if you conceal it or hide it, it's a criminal offence. Like the official police line would be, you should always report a fraud. But I think anyone who's ever reported a fraud to the police would report to you they've had some fairly variable responses to those as well. So they're not always overwhelmingly positive. It is an issue. One observation I'd make about that is the amount of times that you see the same person who has committed a fraud in an organisation, and then when you start digging through it, they've done it at their previous employer and their previous employer and their previous employer. It's funny you mentioned the corporate corruption team in the New South Wales Police started because we kept seeing that pattern over and over, and that was to encourage people to report instances of corporate corruption to us so that we could stop that pattern recurring, because it's very, very common indeed. So we had a fellow here, and he'd set himself up as an HR professional with a bunch of fraudulent documents. And he did a great job as an HR professional because he just consulted out and got these consultants to come in and do all the work for him. And then he thought, gee, they just signed these consultancy agreements. So he worked out a few for himself as well, one for you, one for me, one for you, one for me, and got himself $1 million on top of his already generous salary for a job that he had no qualifications to do. You've almost got to admire the bloke, don't you? And so he got fronted by his employers and quit and went to Melbourne. And while the matter was being constructed and put together, so this question you asked before about what do we do when we've identified someone, how do we get rid of them, and the whole process about getting rid of them. So he disappeared off, and while the matter was being reconstructed to put before the court, he went down and did the exact same thing again in Melbourne. I mean exactly the same thing again. So, and that is incredibly common that you see as well. So my inclination is always to report it and have some sort of consequence for that person to try and stop that cycle from happening. It's just so common.
Is there a timing question as well about when you might tell the police, depending upon the different types of scenarios?
Yeah, that question you asked right at the start as well. So in terms of speed, so there's a thing called the financial crime kill chain. That sounds really cool, doesn't it? So it's so you've got the financial crime kill chain, which is actually a real thing. So if you identify a fraud really quickly in real time, you can go to the bank, and the bank, as long as it's within 72 hours, have got really good prospects of recovering those funds for you. But the bank won't go down that path unless the matter's been reported to the police. So you've got these types of considerations to think of as well. So if you're I've always liked that one, the financial crime kill chain. Yeah.
I'm sure everyone in the room will now remember. Sort of allied to that answer and question is, and we'll sort of delve into a bit of detail now around this endo example, is this issue around using different multiple accounts. And I mean, that's, in my experience, something you commonly see in this space. So I suppose there's an easy answer as to why, because it's harder to trace and track and recover. What's your perspective on
Yeah,
that?
it can be. It depends how they've done it as well. So just I always like to give examples as a good way of explaining things. So, and this is a very common type of fraud. So she was a young girl, worked in a reasonably large company, and she was the accounts payable clerk. And much like our friend with his one contract for you, one contract for me, so she was refunding client monies to clients who had legitimate reasons for having she authorised these. And then she worked out, well, that was quite easy, so I'm just going to create an invoice and put my bank account details on it. And then she started facilitating about $750,000 worth of refunds to herself. And each time it would go to a different bank account, but it was all with the same bank. So she had one profile that she created, and then she'd open up accounts that came off that sub-account. So in the end, it's actually very easy to get into. And that was easy solved too. That was one phone call to the bank. And by the way, if you look at all the profiles, and something you said before I thought was very spot on, Emma, it's not to use these exact words, but don't have tunnel vision and never think that there's just, once you've spotted one fraud, that's the end of it. And that was very much the case there as well. So they thought, well, look, we've identified these 6 invoices and it was worth about $50,000. And then a phone call to the bank and they were, well, actually there's a few more. Well, how many more? Well, there's $750,000 that they could identify just in linked bank accounts. So it's very important not to have that tunnel vision there as well. So that, and they were able to stop that very quickly. And in order for you to recoup the money is a process, but for a bank to block an account, as long as you can give them, it's all a relationship thing that you can build up. But if you know people in the bank and you can give them some assurance, usually written assurance, that those funds that have hit that account, especially in this instance they could see it, were stolen funds, they'll freeze those accounts until, right, we'll hold what's there.
And what level of proof do they need for that?
In that case, the accounts were, the victim bank account and the offender's bank accounts were with the same bank. So they could see that she was moving funds to the tune of $7. They knew what she did for a living. They could see $750,000 has gone into these accounts. One account would open, funds would go in, she'd transfer it back to a main account, close that account and repeat the process. So they could see through the transaction monitoring themselves, we explained it to them, but they could see through the transaction monitoring what had actually been facilitated, what had happened. So an email sufficed in that instance. But never forget, say you're a client of your bank as well. So if they're using the bank account to steal your money, the bank's actually going to be quite sensitive about that a lot of the time. They don't want to upset their client either, which is you. So they don't want to do that. So they want to help you. You just got to get onto the right people. So it's, once you get past the initial call centre, people who really can't help you. But there are people in the bank, if you know who to talk to, who can and will assist a great deal to help their clients.
And even if it's not your account, the banks have an obligation, particularly ones that are on notice of something,
Absolutely. Yep.
to take into account your position and not to breach the duty that they have. So
well, that's right.
They should be acting cautiously.
That's right, an anti-money laundering obligation. So if I'm saying to the bank, by the way, that $2 million that's sitting into that bank account, that's stolen money, they've at least got to go through the process of making inquiries in relation to that, because they know if they fail to do that properly, they can be exposed there as well, and they definitely don't want that. So there are a lot of things you can do through the bank as well. So they're not always the enemy, they're actually usually
your
quite
friend
helpful.
in that instance. Yeah. And certainly from our perspective, that concept of putting the bank on notice as soon as you can is really important, so that you can come back to that and say, from this point, you knew what was going on, we told you, and you didn't do this or you didn't do that, or maybe they did, but our experience is often they don't. But that does give you some leverage later on, and potentially a cause of action. So now we're sort of talking about freezing bank accounts and freezing orders and those sorts of things. So Emma, I might come back to you and ask you just about your role in that process.
Yeah, sure. So, we're really being guided by generally legal experts in that, because we need to know when is enough And so it's really, we're against the clock here, especially if it's, freezing order without notice to the parties. So we're really looking for, I guess, the easy wins in this situation. If we know that if the fraud has been picked up in a particular way with a particular methodology, and we know that it is just substitution of BSB and bank account details into suppliers, then we go, okay, look, we can get up to about $750,000 relatively quickly and easily. How is that matching up with, what the assets of this particular person might be from your inquiries, or and so what we're trying to get a handle on is what could the total exposure of this fraud look like versus how much can we prove to the required level of proof for you in order to go and get that. So it's very much a balancing act about, in some instances, if we are working against the clock and we know that this particular individual may be a flight risk or might be at risk of divesting their assets or moving their assets, then we need to know kind of close enough is good enough to just get that freezing order on. And then we have the luxury of taking a breath and going, okay, let's do a more detailed analysis now around what was the credit card facility? What did that look like? What about the new suppliers? So we can do a whole exercise then. But really, it's about working again with the scope, which is often led by you or your team around what do we need to do here? What's the number you need to get to, and how quickly can we get there?
So what Emma says is absolutely right, and the concept of a balancing act is a really good one. There's judgment calls that need to be made very quickly on, as I was saying before, limited information, because in order to commence proceedings, you need to have a cause of action, and generally, what you're doing when you go to court to seek, say, a freezing order or any form of interlocutory order is you're also commencing your final proceedings. So you need to be talking to the client about, okay, once you commence, you're getting on with it. You've got to have the wherewithal and the commitment to get on with the whole case, seeking final relief. We're just looking to freeze assets or freeze a bank account or whatever we're trying to do to protect your position so that when you are successful, hopefully, there is money there to recover against. So you need the cause of action. You need to be satisfied it's got reasonable prospects. You need to gather the evidence. You need to put it together. If you're seeking a freezing order, you'll be doing that ex parte, which is fancy language for without the other party there. And then you'll be serving that, and then there'll be lawyers on the other side, and things will ramp up. So, how much do you need to be able to prove in order to persuade the judge that there is an issue here that is real and that you have good prospects on? But at the same time, you want to freeze assets to the highest level you can, because at that point you generally don't know what the full loss is, because our experience, Bartier Perry, very much is the same as Andrew's and Emma's, that what you find out initially is generally the tip of the iceberg. So as you go through, there's going to be more and more loss identified. So you might freeze $500,000, but then find out there's 2 to 3 million that's actually the full exposure. You've got to manage that process. But you need to move quickly, get the order, freeze something, and get into the process as well. So you don't have the luxury of just waiting until you've dotted every I, crossed every T, got to the nth degree in terms of the loss before you make the call on when we go to court and how much we freeze.
Gavin, could I just make one comment on that? Just talking about banking and the processes, because I think that's another really important thing is about the process of going to a bank that then raises questions for the person versus coming to get legal advice first, because I think the legal advice is really important, because if you do things in the wrong order and trying to manage some things yourself too much before you've got the advice, that can actually impact the rest of the freezing orders and people knowing about what you're investigating. So that's just something to keep.
Absolutely. I'm actually glad you said that. Sorry, Andrew. But it comes back, I'll hold that thought. And I'll lose this thought if I don't say it now. It all comes back to what we call the coordinated approach, which is what we try and use in this firm, when we're in these situations, because you're dealing with the investigator like Andrew, you're dealing with the forensic accountant, you're dealing with the client like, say, Alice, you're dealing with other professionals within the firm who have an expertise that I may not have. And then we haven't even talked about media and reputation yet, and managing the media and any consultants there. So, and there are other people that might be involved. So you're trying to coordinate all these different people all at the same time. And if one part of the team goes off and starts talking to the bank before, sort of on an informed basis, a decision has been made around what the strategy should be with the bank, then you could put a foot wrong. And so I think that's really a valuable comment. Sorry, Andrew.
No, I was going to say never underestimate the ability of banks to have stuffed something up as well. So it's if they have made errors along the way, and if they get approached in the right way, especially with like a well-written legal letter, the chances are, and I've seen it happen quite a few on any number of occasions, that money will come back without a lengthy and expensive process as well. The banks have got no interest, if they've made an error, in dragging things out unnecessarily, particularly for one of their valued clients. So if that's approached properly and well in the first instance, you can get a very good outcome very quickly and efficiently.
Okay, that's good to know. And I mentioned media and reputation. Alice, do you have any thoughts, perspectives around that?
So again, I think it's going to come down to the specifics of that particular case and that particular organisation. And there are absolutely a lot of things to consider. And again, particularly things around confidentiality and things around the processes that you're going through, and the board and organisations typically have a lot of stakeholders, and they have quite wide reach. So it's very, very important to be thinking again ahead of time. And I think, as you said, Gavin, it's about collecting all the information, coordinating things with good advice so that things happen in the right order is really important. Because there is definitely a huge part to play in communications, but it's just about managing it and making sure that all the key people who are working on that are on the same page, and that they understand what some of those implications might be, and that they have a coordinated approach within their own organisation, as well as a coordinated approach with the right expert advice.
Yeah, that's right. And certainly our experience is organisations caught up in any issue like this, whether it's fraud or something as significant, needs to either have worked out for themselves or worked with their lawyers and any media consultants what their position is, and to try and anticipate what the questions may be, because when the journalist starts calling, they're going to expect a response, and if you haven't anticipated what your responses may be, again, you may be saying or doing something which may cause a problem. So you need to, it's yet another thing that needs to be done pretty quickly, so that you do have a good idea of how to respond and how to manage the situation. Because as we all know, reputations take a long time to build up and can be brought down very quickly and very easily sometimes. So I wanted to ask another question. I suppose this is Andrew and Emma. I'll leave it up to both of you who answers first. We've talked a little bit about investigations in organisations and your roles in that. How important or beneficial do you think it is to have third parties conducting investigations into, say, fraud, internal fraud type events, as opposed to the business itself doing? I suppose it depends on the size of the business, but do you have any thoughts around that?
Absolutely. So I guess from my perspective, there's two real benefits. I guess the first is we've touched on it quite a bit, and everyone's kind of mentioned this theme of trust, right? So whenever I'm engaged by a business, there is very much an element of the trust has been broken, I've been let down, I've known this person for 10 years, they were at my house on New Year's Eve, they picked my kids up from school once or twice, or it might be that they work for a charitable organisation and their conduct has been so at odds with the ethos of the charity. So there's always some, it's emotionally charged, there's disappointment, there's anger, there's all of this flying around, and I think the ability of having somebody come in who does this and does it often, who can turn up in that situation and kind of cut through to really what we need to get done and how quickly is really beneficial, because I think that can often really hamper investigation efforts, especially very early on when everyone's coming to grips with what's actually happened. So I guess for me that's one of the things that we can come in, we can be really not emotionally affected by it and say, okay, in this particular situation, we need to look at these things first, and who can you put me in touch with to help me with those things? It might not actually be the people who worked closely with this individual, it might be somebody else, it might even be external accountants. So that's one thing, and I guess the second thing for me is on a point I think you touched on, Gavin, which is often, especially in the SME medium space, across the whole spectrum, but sometimes businesses can be really keen to just get their normal accountant involved, their regular bookkeeper or annual accountant or auditor. And I think on the point you mentioned, that you just need to be a little bit careful about that, because there may be some kind of liability that we could attach to that professional, depending on the methodology of the fraud, what's happened, what's been missed, what processes weren't in place, what advice wasn't given. And so for that reason, we often say trying to get somebody who hasn't been involved with the business before, who won't be conflicted, is generally the way we would recommend.
Yeah, well, I think that's very wise. I mean, if the accountants say, if financial statements have been prepared by the accountants and they haven't picked up certain things, then whether they're involved in it or not, they're going to have some concern around their personal exposure, and that will dictate how they handle the matter. Classic sort of conflict type position. So
the other thing on that one, of course, is that the question they're always going to ask, say first, or the statement they're going to make first is that, but I trusted him or her. But then usually the second statement will be, but the auditor didn't pick this up. So you've seen these issues have gone on literally for 10 years, like the same thing over and over. So, and that's, I mean, that's actually not a poor reflection on the auditor. That might sound like a strange thing to say, but auditors are looking for balance and usually find balance. So if you're going there looking for like deep dive problems, it's quite a different scenario. But if you get an independent person, I don't have any attachment to anyone or anything. I don't owe any allegiance to anyone or anything except to whatever our letter of engagement is. And the first question we ask isn't, do I trust that person or what did the auditor think? But the first thing we ask is, are we conflicted here? That's the first thing that we look at. And if we are, we can't do the job. So, and the second that we get compromised is you're compromising your own professional reputation, and that's the end of you. So we've got a really good reason to keep that conflict free and to behave like that. But the final thing I think we haven't touched on yet in relation to that as well is often these things get picked up by internals, they'll be picked up by whistleblowers, and whistleblowers, if you ever have much to do with them, will often start to think, because there may be grand conspiracies, there's cover-ups, you're covering up for your mates. These things usually aren't happening in my experience. But the only way to ever really resolve those issues is to have someone from completely outside the organisation come in, and it alleviates those problems.
Yeah, absolutely. That's good advice. Now, you mentioned auditors and auditing as well, and I'm not an accountant. There's a few accountants in the room who will correct me if I'm wrong about this, but my understanding of auditors is that they, as you say, look for balance at a fairly high level and then will deep dive in certain areas. So unless they deep dive in the particular area where the issue is arising, they may not pick it up.
And they might not anyway. So like the one particular instance I'm thinking of, it's actually devilishly clever. I really admired this, which sounds terrible, but this guy was the CFO of a company, and it was a medium-sized business, and he nearly sent it broke, and really it was so simple what he was doing. So their rent and their utilities were all combined into one bill, and he just separated out the electricity and various other utilities. So the business was happily paying what they thought was just the rent, and then separate bills for all of the other utilities and things, and that added up to $10 million over the period of time that he was there. And those monies were just going straight into 2 bank accounts that he opened. So the auditor would come in and say, there's the rent, there's the phone, there's the water, there's the electricity, et cetera, et cetera, et cetera. And everyone was signing off, and he was signing off on it. He was the CFO. Who did the auditor go to to get advice about any queries with the books, the CFO. So of course that never came up. So I mean, I definitely didn't blame the auditors in that instance.
Hence all the qualifications that auditors put on there.
Yeah, that's right.
And just on that, before we move on, when you're looking at some of these causes of action from a legal perspective, you're talking about whether the professional, say, has acted reasonably in what they're doing. And so that doesn't mean they have to pick it up. They need to have done things in a reasonable way to discharge their duty. And it may still have slipped through the cracks in that scenario. So it is quite a complicated analysis sometimes.
Gavin, also I think with auditors, a lot of not-for-profit organisations will have an auditor that is known to them and that is, from the area, particularly if they're not Sydney-based, they might have regional auditors, and they may have that auditor knows that organisation, and there's a support there for them, and that can be really difficult too. So I think that's why people recommend changing auditors. But more than that, I think any looking at preventative things is not so much about policies and procedures. It's more about looking at potential for fraud to happen. So a lot of auditors, if you're getting auditors to be saying to them, if someone wanted to commit fraud in this organisation, how could they do it? So a good auditor will go through that process and brainstorm that as a team and actually actively look at the potential to do that. So I think that's just a shift in terms of doing just the run-of-the-mill audit versus looking at something that's a really preventative way of doing it.
Okay, that's interesting. While we're talking about audits and financial statements and those sorts of things, Emma, I know you can pick up a lot of things from financial statements, but can you tell the audience and the everyone online something about some of the key things that you look for and try to pick up from financial statements that might be red flags in this area?
Yeah, so I guess, look, I'm not an auditor, but there's definitely in the work that we do some common themes around what we need to be looking for, and it depends as well on the business. So depending on the type of entity you're dealing with, a retail environment versus a charity environment or a government organisation will have different types of exposures and risks that we need to be looking at. But generally, we're always, if you're talking about the systems, we're looking at who has access to in terms of prevention, who has access to the systems, how much access to the systems do they have, is there any way that you can lock it down and segregate some duties? So how easy is it for somebody to set up a new supplier, and what vetting goes on there? How easy or hard is it to alter those accounts, those bank account details? How do you physically get that done in an MYOB or an accounting package? If you're in a retail environment or hospitality environment, what's your end of day procedure? Does your accounting system sync or reconcile to your point of sale system? There's a number of losses that we've dealt with where the management that aren't necessarily in the business day to day are relying on the spreadsheet that the general manager sends through at the end of the day, and that's their truth really. But if you go back and you actually look at what the point of sale system says, it's actually quite different. They left 10 grand off the top line of sales that day, and everything reconciles because and that's what your auditor's looking for. So the spreadsheet reconciles to the bank statement, which was banked, and the bank reconciles, and so nobody's really the wiser because we're not going back to that source of truth again. So another example, and Alice reminded me of it, was around what's the process for somebody to report their superior. So if it's not as formalised as a whistleblower, because not often organisations might not be large enough to have that, but how do you go to somebody and report conduct around a general manager when that particular general manager is running the correspondence between the auditor and the business? They are the representative of the business. When they are the sole person really talking to the board, how does somebody, how does the board get notified that actually this is your bad egg, this guy who's got run of the whole place? So I think we're kind of going around about the question in terms of financial statements. We're not often presented, I guess, we're often coming in after the fact. So We're not often presented with financial statements around looking at red flags, but I guess we're looking at, in terms of that best practice and almost that kind of penetration testing of, if I was the fraudster in this business, how would I go about it? And, you can kind of see poke holes in different places depending on the type of business it is.
It's probably a useful assessment for all businesses to make every now and then. And so just picking up on some of the things you said there, does that mean it comes down to the structure of the organisation or the sector there and the industry they're in, or probably both, I guess? Are there any industries or sectors that you're seeing as more active in terms of misappropriation and fraud type events?
No, I don't think it discriminates, unfortunately. And given the decrease of the use of cash and cash circulating as well, I think, a lot of the industries that were particularly vulnerable, like hospitality, pubs, gaming, with, all of the electronic funds, I think we've seen a lot of that disappear. We still see a lot of, the standard frauds continue to be perpetrated by people in organisations, and really they're only limited by their own creativity, I think, unfortunately. So very much so the supplier frauds, the substitution of your BSB and bank account. We've seen a run recently of some off-book kind of schemes. So I think it's not only looking at, when you're doing these assessments of your business, around the outflows of money, so your supplier payments, your credit cards, your payroll, but you also want to be looking at your inflows of money, because that can be manipulated as well. People who, we had one guy recently who worked for a brokerage, and it was quite a large, it was dealing with quite short-term but large loans, and generally, in my experience, it's not common if you go to a finance broker for them to ask you for a deposit for the work they do generally. But in these large corporate type transactions, unbeknownst to the prospective clients, it wasn't common for this business to ask for deposits either, but this individual preyed upon those new clients who weren't actually aware of that process, and charged a deposit off the books completely, not supported by any records that the business held, because it was all out of it. So again, you're talking about locking down the evidence, you're talking about emails, trawling through a lot of that, and that they become quite tricky, because you don't know what you don't know, and really the option is for the business or the client to go out to every single person that might have inquired through the website to get a new loan, and that is potentially very damaging to a reputation, to say, hey, did you put a deposit in with my crooked employee? So not something that people necessarily have the appetite to do. Yeah.
And effectively trying to access personal documents
Correct.
Of the perpetrator
Yes.
to verify things,
Yes.
when that's often quite difficult to do.
You should never forget, though, all the controls and everything that you put in place is just something for a fraudster to get around. Right? So they get in there, they work it out, and then they work out how they're going to get around it as well. So this is also very, very common with them. But it's understanding, particularly with cash involved, and we've had some really good ones in financial statements where the fraudster just alters the financial statements, so it becomes a forensic document examination process as well. So seizing those documents, understanding how they've been altered. He was doing it in a fairly consistent fashion and made off with just over $1 million, this particular individual. And again, at that retail level, when you're talking about that, the really good controls, at the staff that frankly that aren't trusted, who are dealing with cash, and there's cameras over them and people are watching them, and you've got second people have to authorise transactions, et cetera, but as this went up through the layers in this organisation, in fact, as the person becomes more senior and can do more damage, there are less controls around that person, was what was happening there.
That's a consistent theme that we're hearing today. And Emma, you're in and around insurance. In your experience, and you can't answer this completely, but in general terms, based on your experience, are businesses properly insured for fraud events?
Look, I think it's getting better, but we generally see that they are underinsured. The limit doesn't necessarily. It's a good day when the limit covers the entire fraud. It's not common. We generally are exhausting insurance policy limits, especially in the kind of small to medium type organisations where they might have a management liability policy, so they don't necessarily have a policy that just covers fraud. They've got this little bit of everything, so you generally see smaller limits in those types of policies.
Like an extension of a business pack policy or something, to 20 grand or something.
Yes, yeah, exactly.
Yeah, okay. Well, it's now 4:15. We're scheduled to finish up in 10, 15 minutes or so. We do have a couple of questions from an audience member. Before I go to them, I just thought I'd ask if there are any questions from the floor. We do. Oh, we have. Yeah.
Thanks, Gavin. David Crease, I'm a lawyer in Gavin's wider commercial disputes group. An example, but which leads to a question. Now, the panel's been talking about a couple of things: not having tunnel vision when you're looking, and one example that we had some years ago. It'll give you an idea as to how long ago it was, because the fraud was perpetrated by use of forging cheques, which nobody sees anymore unless you're in the States. They still use cheques over there. This involved a guy he was known as the sports bag punter. And he was known as a sports bag punter because he used to take a sports bag full of cash to the races to punt with, and that was his problem. He was a gambler, and of course the cash belonged to his employer. The point is, or the 2 points are, one, so he was the CFO of a business and he was perpetrating this fraud, but in terms of the tunnel vision, when we came to investigate this, we found that he had actually recruited the bookkeeper who reported to him, and you were talking about how do juniors report a supervisor. Well, he'd recruited the bookkeeper who reported to him into the fraud as well. So she was getting some, so that prevented it being found out, and also no one to report him. But the way that he was caught was he went on holidays, and it just so happened that the bookkeeper also went on holidays at the same time, which hadn't happened for some years. And so another employee came in that was brought in, and they discovered the fraud. So out of that, we understood that one of the ways that, and also going back to inquiries and having policies, one of the flags of possible fraud is employees in a responsible position who don't take leave. And so my question is that still the case, that is a flag that you should be having a policy which says you've got to make your employees take leave, because it's not just a case of reducing the leave entitlements on your balance sheet, but also for the potential discovery of fraud?
Yeah, it's very much, it's like one of the golden rules, is that, so making sure people take leave. It's interesting that concept again of having two people involved in a scheme and how much harder that makes it. So I investigated fraud. It was a very, very interesting fraud in a very, very large company, and a very senior member of staff reported the fraud to his line manager, and he got such a bad response. He then went above him and went to the next line manager, and shortly, about a month later, got restructured out of the organisation. It turned out both of those people were involved in the fraud as well. So this kind of goes back to that point you made earlier about getting independent people in, or having, especially in a bigger organisation, having an external whistleblower, like a type hotline, who can handle that type of thing as well. So you hit on a couple of really interesting themes there. So the two people involved, and it gets covered up. But the whole thing about people and not taking leave it's not an urban myth. It's very, very true.
Can I just give one response to that too, that's a little bit, ties right back to your original first question about people outside of their work and what they do and how, who they are as people. And I think that that one of the things that is interesting if you think about the 3 Gs of greed and gambling and gut, because I think, a lot of the time if you're talking about gambling and greed, and you're talking about that incidence in Deloitte, is that's what you're saying is there were some flags where people are saying it looks too good to be true, it doesn't seem like it would be possible, but then for some reason things happen where they ignore those red flags, and then that's looking back they say, yeah, of course that would be too good to be true. So I think those 3 things are probably things to not ignore.
Okay, well, we'll all remember the 3 Gs as well when we leave the room. Now, I mentioned we have a couple of questions from an online participant. So this is for Andrew. I'll just read it out. Is there a limit above which you need to report to the police? Big amounts are understood. Is there a threshold amount above which police would assist with actioning and helping with getting back and in freezing accounts, etc.?
There's no threshold, so there's no hard and fast rule. But one of the things, we deal a lot with cryptocurrency matters at the moment, and so one of the issues that comes up a lot of the time with police, or in fact with engaging people like us to trace down monies, is relatively small amounts of money that have been spirited out of the country, and it then becomes factor of that to try and recover those funds as well. So the police don't seem to have a great appetite for those things at the moment. But there is, like, fraud's an indictable offence. It's a serious offence, whether it's $1 or whether it's $10 million. Only the punishment that'll change, but the offence is the same. So the amount of money shouldn't be any different. I suspect that whoever that person is has probably had a bad incident with gone into a police station and said, no, we don't do anything under $50,000. But no, there's definitely no rule about that.
Yeah, okay. Well, that's useful to know. I think this is probably another question for you, Andrew. When reporting these issues to the police, how does an employee, the perpetrator employee's record get updated so that they, and the question is, cannot be employed elsewhere? And the second part of the question, which is really part of the first, is, so when someone else is doing probity checks on this person, can they become aware of allegations of this nature against them or not?
This reminds me of one of my favourite things, which is what's due diligence. So due diligence is the thing you do after you've been defrauded. So that's always been my experience. But it's so you can't just randomly access someone's criminal history. But if someone has, if you've got a thorough onboarding process and you're getting a person and you're employing them in a position where they're going to have some sort of financial responsibility, you should always get a criminal history check on that person first. If that person does have a criminal history and you do the check, that will come up when you do the check. So that's the due diligence before the fact. It's always unfortunate when it gets found out afterwards, but yeah.
And I suppose if someone is charged and prosecuted and they end up with a criminal record, then
it'll come up.
That's there.
That's
but
right.
If that isn't the case, then
it doesn't.
There won't be an easy search that you can do.
No.
You just need to look at other factors.
That's right.
And what are some of those things? I suppose social media these days.
Absolutely. Like that's the big giveaway. I keep saying to my kids all the time, you can't put that stuff on there. It never goes away. So it's they're unfortunately that age. But I'm sometimes shocked at the fact that people don't do social media checks when they're onboarding people, just from a reputational point of view. Some of the things people put online and some of the positions. I think we just saw this business with in New South Wales politics, where they're trying to replace one person with someone else in the upper house here before the election, and all this stuff's come out on social media. I'm like, what are you, if you can get into politics, close all that business down, So it's but yeah, I always recommend social media checks. I remember there was one, Austrac once employed a fellow who had been charged with money laundering before. And they go, how are we supposed to know? He wasn't convicted, and they said you could have Googled it. So it's this is one of those issues.
Yeah, and just from our perspective as lawyers, and particularly litigators in the room will know this, that if you have evidence of someone being dishonest, then the judge will generally take that and say, okay, well, if they've been dishonest once, then they're likely to be dishonest again. And that's when you're seeking freezing orders and some of these other interlocutory type orders, it's a cornerstone of your argument. So if you do have information out there on social media that shows you doing something that, and I'm not saying I defrauded a company, but can be used to put together a picture of you as a person as being not entirely honest, then that can be used in those situations against you to say, well, this is a dishonest person, Your Honour, so you should come down on them like a ton of bricks or do this or do that. So it's a timely warning, I think, Andrew.
Is. I think, Ian Drury, we want to talk about showing my age here, but Ian Drury sort of knocked this out in the 70s with his song Sex and Drugs and Rock and Roll, so these seem to be common factors as well with people there's always these, so often drugs, gambling, these types of things come up. And then when you go back through records, you find all of the references to these types of things, and often all of them put together at the same time as well. So there's some, but once people are compromised and once they've stolen once, it's almost like they just go, oh, well, I've done it once, so I don't care anymore. So there's often a lot of evidence that's available there for you, should you choose to look for it.
Yeah, okay. Well, that is a timely reminder. Now, do we have any other questions? Okay, well, if that's the case, I know we're a few minutes before the scheduled finishing time, but we've covered the content that we wanted to get through today. So I'll ask everyone to thank our panellists in the usual way. Thank you. And also our Bartier Perry partners, who were happy to get up and say a few words about various aspects. It's very much appreciated. I hope everyone found that interesting, and thank you for attending today.